Hello again, and welcome to our look at the Tuesday, October 28th trading session. In front of you, I have the economic calendar, and as you can see, not a lot going on in Europe. Pretty quiet, really, until we get to America as far as economic announcements are concerned. Core durable goods orders for the month of September, month over month, is anticipated to gain 0.5%. That is a very U.S.-centric number, probably affecting the stock market such as the S&P 500, the Nikkei, the NASDAQ, etc. The better the number, the better the stock markets will do. It's pretty straightforward, really. We go a couple hours, and then we get Consumer Board's consumer confidence numbers, anticipated to come out at 87. Again, this should affect the U.S. stock markets more than anything else. And then as you can see, as I scroll through the rest of the day, there aren't too many numbers to worry about going forward. That being said, we do believe that this is going to be more or less a U.S.-centric session. Because of it being a U.S.-centric session, I will pay a little bit more attention to the U.S. markets. As you can see, the S&P 500 is having a slightly negative session for Monday, but really at this point in time, after this massive move higher, why would you not anticipate some type of slight pullback? Or, if nothing else, just a simple catching of the breath, if you will. Pullbacks should continue to offer call buying opportunities, and on a better than anticipated economic announcement, either one of them really, we think that could be reason enough to start buying those calls again. Looking at the gold market, you can see that we've had a very quiet session during the day on Monday. We believe that there is going to be continued support somewhere in this area, but we do not have a candlestick here that really has us wanting to buy calls. Certainly don't want to buy puts at this point. There's too much support just below. We would need a daily close below 1220 to start considering that. If we get an impulsive move higher, maybe break above the couple days ranges here, then we could buy calls with perhaps an eye on the 1250 level. In the meantime, though, we expect very choppy and very flat trading until the market makes up its mind. You can see that the euro did pick up a little bit of strength during the session, but really we're still very much in a downtrend. And also, if this bearish flag type of scenario is true, it wouldn't be a big surprise to see the euro pop a little bit from here and perhaps test the underneath of the flag for resistance. A resistive candle in that area, shooting star, or even just a weak looking candle, really has us buying puts as the euro should eventually go back down to the 125 level. Really no interest in buying calls until we're above 130, which is something that does not look like a real threat at the moment. And finally, looking at Apple in the United States, this is a stock that has broken out above the 104 level, and we had recognized that as resistance previously. We still have plenty of momentum, and we feel that pullbacks, probably all the way, quite frankly, down to about 100, are going to offer call buying opportunities. Keep in mind, though, that this is a little bit longer term move, but Apple certainly is not a stock you want to go against. We are most decidedly in an uptrend. There's no two ways about that. So having said that, we are very bullish at Apple and like buying calls, but believe we might be able to get a little bit of a pullback or a sideways move first. So while we are bullish, we also recognize that this could be a little bit of a slow grind higher. And with that, we have taken a look at the Tuesday, October 28th trading session.